Are we live? Let me check. Okay, I can see we are streaming on YouTube. So looks like we are ready to go. Mountain is here. Hope I read this correct. Let me just look at something. Okay. Sound is okay, because last time I think I was a bit of lower volume, so maybe if I can adjust it a little bit. Okay, so we are good to go. So before we go to the chart, just let me remind you that we have Black Friday deal extended to Cyber Monday. So if someone is interested in our analysis, similar like we will be covering in this webinar, I invite you to check this website, wavetraders.com, look for Elliott Wave plans. So if you buy the monthly membership, you can get the 30% discount and one additional month for free. So you get basically extra month, meaning 2 months for this discounted price, or unless you decide to take advantage for the yearly membership. Also, let's not forget to mention that Eightcap is sponsor of our webinars. So if you are looking for a new broker, if you want to take advantage of 30% deposit bonus, or maybe even apply for a free TradingView access, make sure to visit our website as well here on sponsorships. So firstly, as you know, we will, and I want to start with the cryptocurrencies, okay? Because cryptocurrencies, interestingly, are reversing to the downside despite this risk on mode that we have, despite lower dollar that is seen right now in the start of the week, despite metals that have seen a very strong push to the upside, despite the fact that there are more and more chances that Fed really cut rates in December and maybe even after May, because Trump is obviously making everything ready to that everyone who will change Powell will cut rates further. So basically markets are in risk on mode, dollar is coming to the downside, but cryptocurrencies are still under pressure. So it's a bit concerning when you see cryptocurrencies moving to the downside, even on days when we have stocks doing pretty well. And looking here at the crypto total market cap, and I will also scan some of the other caps as well, you can see that basically we are still trading on below 3.2 trillions, below this trend line resistance. So basically technical, that's still a downtrend. Okay, of course this one is massively impacted by Bitcoin price itself, so it's not really surprised that this one could also see more weakness into wave 5 if Bitcoin will also resume towards 75k or so, the wave counts that I will show you in a second, and I also talked about this last week. So this is still for now bearish trend, and I do not see any kind of a bullish resumption just yet, but of course it would be much more easier call maybe when we will see a new low, because after 5 waves down, then in wave C or maybe wave 3, you would expect a minimum 3 wave recovery, 3 wave reversal, right? So after that new lows, I think that market could be looking to stabilize, especially if we will see stocks futures resuming to new all-time highs, which seems like this could be the case. But maybe in the near term there could be some pause on stocks, and this could maybe cause even more weakness on cryptocurrencies towards these new lows. Now if you look at this one that excludes Bitcoin, also it's not looking bullish yet, but we have potential wedge building up, but even this wedge is not really calling a completed downtrend yet. We could easily retest the lows before the market reverse higher, but overall it signals that this lag down from October highs, basically not October highs, from mid of October, is basically a wedge formation. We have some overlap, so this could be an interesting interesting price guideline, I should say, which suggests that maybe we are going to see some reversal from a bit lower, because whenever you have a deal with an ABC formation, typically you will see that wave C will be much more complex and much more slower compared to the first wave A, which is usually very strong and very sharp, much sharper, like we can see here in this example. So maybe this tells us that we could be approaching some supports, but definitely not at this point. When we have Bitcoin moving to the downside, it's not an easy call to look for potential opportunities on the upside here just yet. Even here we have this one that excludes Bitcoin and Ethereum. Even this one shows potential idea to retest the lows. So from a new lows, I think that on this, when looking at the crypto total market caps, especially when Bitcoin would possibly complete this wave 5 to the downside, that's when I would be looking for potential reversal and maybe find much better opportunities up there if you are waiting on longer term on opportunities on the long side for trades that could last maybe from a few days to a few weeks. For if you are looking for cryptos like a longer term investment, then maybe this current sell-off is just another reason maybe to look for potential to add to your positions or portfolio at lower prices. Now, if we look at it, this one is Ethereum dominance. The reason why I'm bringing on this one is because if Bitcoin would stabilize at the new lows somewhere in the next few weeks maybe, and then we will still see Bitcoin dominance turning to the downside, then I think the Ethereum could be very nice. And I think that when comparing Bitcoin dominance and Ethereum dominance, I think that this one, the Ethereum dominance, has a much better, clearer structure here. So maybe we'll try to stabilize maybe around 11% or so. So based on this, I think that could be some flows from Bitcoin going into Ethereum, and in the next potential bottom formation on cryptocurrencies, I think that Ethereum could still could be pretty interesting. But of course, Bitcoin itself could be still very interesting, at least for some short covering rally. If we take a look here on net unrealized losses, we covered this one, talked about this one already last week. We have seen some spike, but still nothing really much has changed since last week. But I assume that this data will go to even more extreme levels, meaning more losses will be seen now with the price will drop towards 80k, 75k, which I think it's quite possible here in the near future. Looking at liquidation heat map, you can see that there are some important levels and big orders around 93k. Then you have a 96k. Interestingly enough, we stopped perfectly at 93k right on Thursday when there was Thanksgiving. So as you know, thin trading conditions that usually can easily basically change the flows, the rhythm of the market, and maybe just some traders took advantage of thin trading conditions and grabbed the shorts and are now looking maybe for more weakness. And if I look here at some of the big orders on the downside, I think that 73k, 74k, around there, it's pretty important one. You have this this one from August. That's August? No, that's not August. It's April. So that was a very important swing support, and then you have around 60k, also another even massive orders down here. So probably some big players are waiting for this to be triggered, and then maybe we see some rebound after the market completes 5 waves down, as I will show you in a bit. But what I have been discussing last week, that as you know, we have a massive exchange outflows, right? So meaning there were a lot of investors, traders that want to hold Bitcoin on private wallets because they believe that price will rise. And I said that maybe Bitcoin price itself, now when this occurred, has to come down, because maybe Bitcoin market will try to liquidate some of those that buy but too early. So I will be keeping a very close eye on the exchange inflows, okay, because this would tell us that there are some investors who are worried that the price would move even lower, and that's why they will move Bitcoin to exchanges, so they will try to get rid of Bitcoin. Okay, so we are not seeing any kind of a massive spike, but if we will see something similar like maybe we have seen here back in 2024 in July, this one was also interesting for August 2024 low. Of course, keep in mind that these exchange inflows are more important when you have price moving to the downside, meaning in a pullback, not at the highs. Okay, so that's why that's when you want to keep a close attention to on. So because this would tell me where the sentiment basically is. Now looking at the wave structure, so last time, as you know, we've been looking for, I believe we covered this to our analysis for Bitcoin. So we said that we are looking for a corrective rally in wave 4. The perfect resistance would be around 93k, and we basically almost on dollar will stopped up there and reversed lower. And even if you compare wave 2 land, okay, to current wave 4, it was basically the same. Okay, so it was textbook example from an Elliott wave perspective. Also, like I cannot forget these early days of cryptocurrencies, especially Bitcoin, when all of those cycles on Bitcoin structures made perfect shapes through bull markets and bear markets, because it's market that is not really controlled, and it's more it was more driven clearly by sentiment rather than impacted by some institutions, or maybe more important regulations. So now what I'm looking at is that possibly we are in a fifth wave, that we could see a new low. So I'm saying that 80k is something that we could see, but 74k is maybe something that could be very interesting. And the most important, it's that low from April of this year. And you know what has been happening down there. It's when Trump firstly announced that he is imposing new tariffs globally, but then when this dust has settled, we have seen a massive reversal to the upside. So now we are basically erasing all of those gains after April. So that's why I think that this could be a pretty interesting and attractive support. That's one thing. The next thing is that whenever you have deal with a 5-wave movement, if we're really going to see a new low, then after 5 waves you can expect market to stabilize. It doesn't necessarily mean that it will move sharply to the upside in some kind of impulsive fashion. It could be only ABC rally, but at least some stabilization should occur. And then once we have some recovery, some bounce and some price action to work with, that's when we could maybe more confidently try to predict where the markets will go after that rebound will occur. Okay, because for now we just simply cannot say for sure that we are going to see a massive reversal from that point. Okay, it could only be just a temporary corrective rally. Keep in mind that, as we said, we are just still in the first 2 months of this potential deeper correction that could take that could last for around 12 months. So we are still far away, right? Because this cycle has begun in October, right? So but that doesn't mean that the price pullback itself will be deep. It doesn't mean you have to see a pullback for around 80-70%. Sometimes corrections will be deep, sometimes more longer in time rather than deeper in price. So that's something that we have to consider. And if you're a more long-term investor, if you will see some massive sell-off and very big sharp decline when there will be a lot of fear, well, if the price will be at your levels and very interesting to buy, you still can buy it, because at the end of the day, you are buying the price, right? And time will award you through the next cycle, but of course you will have to be patient. So I'm also watching the levels around 74k and all the way down to 60k. So that's for Bitcoin. If we also take a look at the Ethereum, the Ethereum, as you know, is now approaching this some pivot level, we could say, from that July 2022 recovery, and we will see how the market will respond from there. If we're really going to see some impulsive bounce on a smaller time frame, maybe to call the final push to the upside to complete this wave B rally, or maybe what if wave B rally already finished here. So to discover this, we of course have to keep a closer eye to the smaller time frames here. So last time when we had the webinar, I said that this could easily be read as a WXY formation because of plenty of overlaps. But what is my concern here is that recently, after this rebound and a small sharp small breakout out of this downward channel, the market basically came back to the downside pretty aggressively right now. So still we don't have the price action which would support the idea that we are reversing, especially not because the previous swing low acted as a resistance. And whenever I'm looking for some kind of a bearish trend and then want to see our confirmed reversal, I want to see that the previous low will be broken decisively, and then market recovers above it, and potentially after retest we see push to the upside. So that's not really the case here. Of course it can still happen, maybe, or reverse, or this thing can still turn around, but I would definitely not be looking for some kind of a trades here, because I clearly see this also as a possibility. It's a second wave count, which shows that even if you look closely, in fact this could be like an ongoing bearish impulse down from 4,800. So you didn't have these overlaps here on the way down. Even some wedge formation is also possible with the retest of 2,400. So still, we have a few wave counts that suggest that maybe near-term weakness should not be ignored, but maybe there will be some interesting support and reversals on these markets, especially, as I said, if Bitcoin, which by the way is one of the weakest lately, could possibly bottom here around 74k. Then it would be much easier to find some opportunities even on alts, I would say. Looking at Ripple now, short term, we retested this support here around $2. We have seen some rebound, but even Bitcoin weakness is now trying to bring the prices down here on alts as well. But if you zoom just out a little bit, you can still see that this can be a corrective movement. You could even compare maybe this wave 2 cycle to the current one, and if we make some projections, maybe the next potential reversal to the upside could come maybe in January, if this price action will just keep chopping around here. So patience is needed here, but definitely it's the whole structure, the whole wave count suggests that this could be a correction, because what is really the most important is that this was a free wave move to a new high. So it could be part of wave X, or maybe even of a flat correction if you adjust the wave count a little bit. But I think that if we go suddenly back to this support level, still could be very attractive for the next bounce here. Looking at Solana, we covered this one as well last time. So Solana is at the first support, where we said that potential triangle could be potential triangle if this support holds, but if we don't see a bounce, it's just the supports are just the numbers on the charts. Okay, so we are not seeing any kind of response from there. So I would stick to my primary target around $80 would be much more ideal zone for potential rebound. I would say maybe again next year. So in 2026, maybe after some more sell-off, more liquidations here, I think that there could be some very interesting reversal higher. Okay, so that was part for the cryptocurrencies. Again, if you're not our member, make sure to check wavetraders.com. If you're not a subscriber here on YouTube, please subscribe to the channel, and please press a like and support us so that we will be listed higher on YouTube. Okay, now let's take a look on some of the other global markets and the FX. Firstly, we will take a look on dollar index. So last time we said that that's a very important resistance here, very important level. If you just ignore the wave counts, clearly you can see a very important level around 100. It was the support a few times in 2023, 2024. And then when we finally broke below that level a few months back, 6 months back, then this level has been tested as a resistance a few times. And now it looks like that we are reversing lower. What is probably the most important is that we have some wedge formation here, okay, from that low. So like I have been saying last time, I'm not here to say where the market will exactly move from here. I just try to discover the most probable wave patterns and structure that will maybe bring on the most probable near-term direction. It doesn't mean longer-term direction. So what I want to say by this is that if that was a wedge formation, I definitely realized that could be a wave C of potential flat, or possibly could even be leading diagonal of potential bottom here, okay? But what's the most important is that in both interpretations suggest that there could be limited upside. So we've been discussing about that last time and said that at least 3 waves of a pullback could occur. And now if we will maybe zoom this out in a little bit, and if we will look closely, you can basically see here we have an unfilled gap right here from October 3rd, okay? That was the closing price, that was the open price, and this gap, it's a bit smaller. Euro dollar came close to it but didn't actually fill it here on October 17. Of course, it's the flipped picture. So basically I still think that this gap could be filled, that prices could possibly extend lower towards this area, especially now when we have the risk on environment. As you know, stocks have seen a pretty nice move to the upside. There are again bets increasing in for potential rate cuts. So firstly, as you know, Powell in last conference said that they are not really convinced, 100% sure what they would want to do in December. But then there were just a few days later, there were a lot of Fed members who are coming out and just saying that they are saying that they want to cut rates. Okay, so they want to give impression that markets they will cut rates, and that's what markets are now pricing, and that's why we are seeing this reversal to the downside on the dollar at the same time when the stocks are moving to the upside. Also, it's worth to mention that the 10-year US notes are still somehow trapped in this range, but I'm expecting them to see a move into that area, and then possibly when we reach between these two massive levels from September 2024 and this resistance from April 2025, that's when we could possibly see this reversal happening. And this could then, obviously, if the treasuries would come to the downside, if US yields would suddenly rise, of course this will also have an impact on the dollar turn as well. But for now, it's very clear that we are expecting maybe final push higher here on treasuries, while US dollar index is trying either to target this gap or maybe even new lows. Now looking at euro dollar, it's really just a mess. But whenever there is a massive price action, you just zoom out a little bit and let's see what's happening there. And you can see clearly that was a very strong uptrend, and that's now the sideways price move. So the best easier idea is to label this as a counter trend movement, also because this drop somehow has an overlapping decline. And we mentioned a triangle idea already last time, but unfortunately it was not very easy to say if we are already going to see a very clear free wave rally for wave D, or wave C will be much more complex. But with the beginning of this week, looks like that we have a pretty clear directional moves here, and I would assume that euro dollar will see more upside. So as I said, with dollar index targeting 97.70, possibly with 3 waves drop, I think that that here wave D could even extend back to these levels from October 17 high, which was around 117.30, maybe even higher. Then I would be observing the 61.8% for potential resistance, because if we are in a triangle, then the FIPS normally will limit the upside of each leg around the 61.8% of the previous leg that moved into the same direction. So that 61.8% is basically from that leg. Okay, so that would be 117.80 around there. But before that, you obviously have this first resistance around 116.60, may not be easily broken. Maybe it's just firstly some spike, then you see pullback, and then in the remaining part of the week we will see a further upside, right? Because especially when you have on Mondays such as sharp moves, well, this Monday flows, as you know, can be reversed. It's called Tuesday reversal. Now let's take a look on Aussie. So last time we also talked about Aussie. We said that this market is coming to the downside out of a triangle, and that we could see potential limited weakness. I personally was maybe expecting with one eye that maybe we'll drift prices a little bit lower, closer to these June lows, but we have seen a very strong rebound, and this rebound occurred, I think that it was higher inflation reading from Australia that happened on Aussie at the same time when we already had the S&P 500 recovering. So here you can see that the S&P 500 rebounded very nicely basically a few days earlier, but then Aussie just extended to the upside after this data came out. And now I think that when we have Aussie trading well away from that key support levels, I think that with the S&P had it even higher, the Aussie could do the same. Okay, so after some retracement, I think that this retracement maybe could give you some interesting opportunities to join this trend. What is the best when it comes to the Elliott wave principle is that whenever you think you have enough of data and price confirmation that the low is in, well, you exactly know where the invalidation level stands, the closest one. It's right here. Okay, it's at 0.6422. So as long as we are trading above that level, I think there is a chance that after a pullback we will see more upside. But why this invalidation short-term levels matters? Because if you zoom out, well, on a bigger chart, on a bigger cycle, the invalidation level is here. Okay, that's why I think that Elliott wave principle itself, it's very useful when you have confirming price action, because you exactly know where to put the stop loss. It's different story when you're trying to buy just blindly the falling knife here, and then you never know where exactly this price will stop, and you will have to put the stop loss far away. Okay, but when you have this kind of a price action, it's much easier approach, and definitely much more useful from a risk reward perspective. Also, it's not only Aussie that has seen a rebound. We have also seen a very nice rebound here on Kiwi as well. So Kiwi, as you know, we've been looking for this wedge formation right into the 78.6%. Very nice recovery has showed up, and looks like that's an impulse again, signaling for more upside. So this market came to the upside despite the fact that Bank of New Zealand cut rates last week, but they said that probably they hit the limit with cutting rates. So in other words, it means that they are not looking to cut rates further. In fact, there were some, they even said that they're seeing that economic activity has improved in recent months. So that's maybe why they will hold back from further cuts, and that's why we have seen this reversal to the upside, because markets will always try to move on expectations, what banks economic data will be in the future, what banks will do in the future, central banks, and not what is happening right now. Okay, because it's most of the time buy the rumor, sell the news impact. So Kiwi here, invalidation level is at these lows. As long as we are trading above that level after pullbacks, I think that we could see more gains. And that's not the only two. We also have dollar Mexican peso as well. I know that we've been analyzing even this one quite closely recently with our intraday updates. By the way, on our website we also have not only these wave counts that I'm showing you in this webinar, but also have the intraday smaller structures like 4-hour, 1-hour time frames as well. So it really depends what kind of a structure is there and what kind of a clarity we spot. But recently dollar Mexican peso was doing pretty well. We have seen a retest of the previous fourth wave triangle pivot. Then we have seen a sell-off through the channel support. You can call it a flag if you wish. So we retested this, and now it looks like that we are headed lower. So maybe the final leg here to the downside could be in the cards. But then after 5 waves down, keep in mind that market could reverse. Okay, and maybe these reversals could happen on a lot of fronts. Now let's take a look also on dollar yen. So dollar yen, you know, is, I mean, I have to admit it's a very tricky because it moves in the one directions. Then you have BOG that could possibly pull the trigger and bring the pair into other direction, but then at some point they are just watching. They don't want to comment the exchange rate, or even if this one is moving to the upside, even if the whole trading community knows that they don't like what they see on the charts. And this makes me think that we have to be very, very careful at the potential with the potential bullish trades or trends, especially when you have price moving into the resistance, and you know that sooner or later BOG can take some actions here. That's one thing. And the next thing is that we still have this massive gap here at October lows. So I'm not sure if or when this gap will be filled, but what I know that they are very, very rarely stay open, especially in the cash market, so spot market. So I think that there could still be a reversal to the downside, but maybe we just have to realize that this resistance was not really retested just yet here around 158.19. That's when we could maybe start looking for completed wave B rally, but we are not at maybe at that stage just yet. But I will definitely keep a very close eye on a smaller time frame, because as you know, if on a smaller time frame this drop, which for now is only in 3 waves, would unfold in 5 waves, then again, as I said already earlier, would be confirmation that market is turning, that something else is going on. Now let's take a look also on euro versus kiwi. So last time I think they covered euro versus Aussie, but now looking at euro versus kiwi, keep in mind that whenever you are in risk on mode, whenever you have central banks like from New Zealand, from Canada, from Australia that are very maybe are slowing down with the overcycle and are now signaling for a pause, then you will see a very strong impact also on those cross pairs, especially when you also will have stocks in risk on mode. Okay, because whenever stocks are in risk on mode, an investor's traders will be more linked and to commodity currencies. So in such case, of course, I would not be surprised to see if there's going to be further risk on that euro versus New Zealand dollar and other similar pairs will come to the downside. And if you look closely, we have a very aggressive sell-off from the most recent highs. It looks like a wedge formation. So after some rebound, maybe closer to this trend line, you could see maybe another push to the downside. Doesn't really matter how sizable move could be to the downside, but I think that we could retest these lows at least from October 27th, maybe even reach this trend line support connected from 2024 lows. So in the near future, I think that looks like we have some limited upside here, and that this one itself is just signaling that commodity currencies could really do well. Now let's take a look also on this one. Is going to be euro Swiss. The reason why I'm showing you this one and not dollar Swiss is because, as I said already a few times before in our past webinars, well, Swiss National Bank, they are worried with the rise of Swiss franc, right? And they could easily intervene. They could move to negative rates. They said this a few times in the past, but they are not focused on dollar Swiss. They are more focused on euro Swiss, because Switzerland is exporting more stuff to Europe rather than to US. That's one thing. The next thing is that euro Swiss franc has a very nice downtrend here, right? But keep in mind that we see some potential wedge formation. So I don't believe that we will see a massive sell-off going further. I just think that there is greater probability we'll see some unexpected reversal in the opposite side. Okay, especially because that's what usually causes the wedge. When the price action itself, it's very quiet but still moving to the downside, well, that's when you will see the most surprises. So market could do the unexpected thing and could reverse higher. That's one thing. The next thing is that from that new low, by the way, I was informed this by our subscriber, our member who brought attention to this. From that new low, we have seen 5 waves up. Okay, so that's a very nice clean 5 waves up. So again, in Elliott wave terms, whenever we see 5 waves up from the most recent extremes, it signals a change in trend. Could be temporary change in trend, could be long-term change in trend, but definitely suggests that we could see more upside. And then you also have Swiss CPI figures that will be released on Wednesday. Okay, so this data maybe could be the catalyst for next potential recovery. But if we see any move into that area, at least technically, I think that it could be quite interesting to expect some rebound while the market is trading above this invalidation level. Now let's take a look on gold and silver. So what's going on here is now on metals. I've been looking for correction. I thought that correction will be a bit longer in time, not necessarily deep in price. So we had a few options on the table. I was looking for potential triangle on silver, also still possible on gold, but then something unexpected happened on silver. As you know, price moved to the upside because CME halted trading, and they're saying that it's because of shortages. They didn't want to move silver from US to London, where the price in London was cheaper. So there was trading active, and of course there was a lot of demand coming from there because the price was cheaper, but they didn't want to move silver to London. They rather halted trading and keep silver in the US, because we know that there's a lot of shortages issues, and rather bring the prices higher rather than send silver abroad. So we have seen these prices moving sharply to the upside. It doesn't mean that, by the way, that this is the correct. There are just a lot of different ideas flying around the internet, and maybe that's one of the reasons. But of course, the official reason for this halted trading on Friday is a bit different, as you know. But anyway, from an Elliott wave perspective, what's happening right now is that we could be here in a wave 5 or 3, but still room maybe for $60 here. Also, if you look at the smaller time frame, if we think we are in a new cycle here from October 28 low, and that's not the right labeling, okay, the label, and that was some unexpected flat correction. Well, you are now then making a new 5 waves rise. But even if this 5 wave rise is going to be ending diagonal, you still should see more upside. And the reason why I came with the idea of an ending diagonal is because in the first this recovery, you had 3 wave structure. Okay, and that was also one of the reasons why we were looking for potential more complex correction rather than calling a new uptrend. Even if I would be turning bullish down here with wave 1, 2, you would then have later on, after this wave 3 rally, wave 4 that would invalidate the bullish interpretation. So it was a very tricky situation, not easy to find any kind of a useful setup here on these smaller time frame cycles. Of course, longer term cycles is a different story. But here now, even if that's going to be some kind of a wedge, which by the way, it's still a very hard call, I have to admit, you still could expect more upside. So after a pullbacks, if we get the previous supports, as you know, to stay in uptrend, the previous highs should turn into support here around $54.80, $55 per barrel. Per barrel, yeah. Sorry. So that's for silver. Still expecting more upside. Of course, after some pause, keep in mind that this pause could easily happen because we don't have gold breaking out just yet. It's still trading below its recent highs. But the gold silver ratio here, you can clearly see that it's breaking this trend line support now, so it could stay in a downtrend. And also, not sure if everyone noticed, but it's also important to look at dollar versus Chinese yuan. This one is also came down from this recent consolidation. Looks like we are in 5th wave and has a room for much more weakness. And of course, there will be some rallies, but overall, let's not forget on a very big picture for metals versus dollar Chinese yuan. Keep in mind that we are looking here for dollar Chinese yuan for an important multi-year top, okay? And here, each time in the past when we have seen a massive reversal, metals have seen a recovery, and it also happened recently on gold, and we've been covering and talked about this in our past updates. So of course, whenever we will get and see some retracement, I think that there will be more upside, and maybe gold will still give us some ideas and potential opportunity to join this trend. What I liked so far is that this drop was in 3 waves, and now we came to the upside, but not really breaking out. We're just trying to fail at this resistance. Of course, there still could be a bit more upside. I believe the 78.6 is around 4,300. But if we'll see some retracements, then maybe triangle still one chance here, and of course potential opportunities could show up then still in the next few weeks, but we have to wait a bit more longer here, in my opinion. Also, when it comes to second interpretation, similar to silver, could be that even this one, maybe if we'll keep moving to the upside, even this one could be a wedge formation. But if we'll see a straight push to the upside, I'm not really sure if the price action itself and the price pattern will allow us to discover any kind of useful opportunities on these 4-hour time frames. But we will definitely keep a very close eye on these developments. Now let's take a look on the final markets today. It's going to be the S&P 500, so the S&P index. So the S&P 500, you know, we have seen a very nice textbook rebound from that October 10 gap. When this massive sell-off occurred on Friday, we filled this gap on futures and reversed higher, and now looks like that we have an impulsive characteristics here. Of course, market could slow down a bit. Keep in mind, it's the beginning of a new month. Beginning of the new month is important as well as the last day of trading days of the previous month. Okay, so because that's the period when you will see a lot of position portfolio adjustments, especially when you are headed into the end of the year. And if someone after this, keep in mind that for the S&P 500 itself, 5% of a pullback is quite a lot. And if someone was long, of course, for the last few weeks or so, and you have seen this rebound, then if they want to have like calm December, then maybe some will be going out with the profits after this very nice rebound. So there could be some rebalancing, and of course, especially towards the end of this month, you will see this happening even more. But overall, if there is some position adjustment at the start of the beginning of a new month after this nice push to the upside, it means that if the flows change, also direction could change. So there could be some retracement maybe in the near term, but if we'll see one, will be only temporary away from that trendline resistance, and then possibly we can start attacking and looking for even further upside. So these pullbacks, of course, could also cause some retracement on commodity currencies, and that's what could also give you opportunities there if you're not maybe just trading just futures or some CFDs on these indexes. Then of course maybe you could draw the parallel line with the FX. Now looking at German DAX, also last week we highlighted these first key support levels. We spiked below it, and what's the most important, we finished the week quite strong, and now we are just pulling back. So it looks like that there is still a chance that we will continue to the upside. Of course, there are some alternate views, because it's always a bit tricky to admit that whenever we have moved to a new high, labeled it as a wave X, there's much more common to see wave B move to new high rather than wave X. And then wave C, as you know, should be structured by 5 waves. And this could also be the case if we would see some kind of a wedge here and retest the lows. But even if that would be the case, still I would be looking for limited downside here, because this whole price action is very muted, very slow, basically since May of this year. So it looks like a correction within uptrend, and it's not, of course, it's not always easy to be smart and exactly say where this whole fourth wave has has ended. But I think that we could see a push to new highs. And keep in mind that there were even periods when DAX was making new highs, the S&P 500 was lagging, and also vice versa. So it would not surprise me that this could also happen maybe in 2026. But in 2026, after this final legs to the upside, after maybe final drop on the dollar, the massive change in trends could happen. And that's why I said earlier, and don't forget, subscribe to our YouTube channel, because at the end of each year I always release free video, my forecast for the next year. I've been doing this for the past few years, and I'm planning to do it the same this year. So make sure to subscribe to our channel and press a like, okay? But if you're interested in more, make sure to visit us at WaveTraders.com. Cyber Monday offer, 30% off on first month, but you will get today, only today, 1 extra month. So it will be 2 months basically for this discounted price. Traders, good luck. Talk to you soon. Oh, what I forgot, US single stocks, I will be updating this in the next 24 hours or so. So that's a free beta service. If you are interested, make sure to register, apply for registration. There are some interesting levels yet to be discovered, interesting setups, especially now when you have these things turning around, not only on the S&P 500 but also on other big indexes as well, like technology sectors. Traders, have a nice, good trading week. Be careful out there, and don't forget to put your stop loss in place always when you are making trading decision. Trader, good luck.